Hello, my name is Von Steinstra. I'm the president of the China Speakers Bureau, and today we talk with William Bao Bean. He has been in the financial industry himself. He's now in innovation, and we're going to talk about lending, the core business of banks. At least it was in the past, and they're losing their competitive edge a bit. William, what's happening to lending, traditional lending?
Sure. So I live in China, which has one of the, uh, I would say, more developing banking systems. You have huge, large, state-owned banks that have been making the transition to efficiency and privatization. But they still, for the most part, serve large companies and large state-owned companies. And that's created a big hole in the financial services and financial products market. Because if you're a small business or if you're a consumer, it's very difficult to get any sort of small business credit, loans for consumers, credit cards. For example, if you're want to apply for a credit card, in order to get one, you need to put up your house as collateral. Well, that's not exactly a credit card. That's more like a debit card attached to your house. So things have changed, and we're seeing the rise of P2P lending, so lending platforms that cut out the banks, and more recently, P2P insurance, because insurance is one of the most staid, traditional, and consumer unfriendly businesses out there.
Okay. Now, China has a notoriously bad infrastructure, bad financial infrastructure, and that's changing fast. But what's happening to the core business of the banks in Europe and the US? Do they face similar dilemmas?
Sure. I think the US banks have it the toughest, and the international banks offering in America, because you have increasingly tough KYC, know your customer regulations. So operating requires a huge amount of oversight in the US, whereas in the emerging markets, there's less oversight, but there's also a lot less basic infrastructure there. The interesting thing about China in P2P is because you don't have those traditional banking products, like the ability to get a small business loan, P2P is taking off. So P2P in China is 80% of the global P2P lending in the world. So you're seeing a lot of innovation in China, and that is spreading generally not so much to the US and Europe, where you're seeing P2P lending as a larger percentage of the lending in the market is more in the emerging markets, where it's very difficult to get a traditional loan. Now, the implications for the banks in Western Europe and the US are pretty big here. Because P2P can be you see a lot lower fees for the person taking on the loan. There's still a lot of credit checks, but there's a lot less baggage that you get when you're working with a P2P platform than when you're working with a traditional bank. And it's a lot easier to get an approval.
Yeah, but I know how hard it can be to open up a bank account in the US. Do you think these existing regulations that actually stop P2P lending might block a similar development in Europe and the US?
I'm not an expert on the US regulations, to be very frank. I've been out of the market. I left the Silicon Valley in the first dot-com bubble popped in 2002. But I know that you have an industry has popped up around payday loans, super high interest short-term loans. It's easy to get loans there. Unfortunately, those loans are not very favorable to the consumer. I saw a statistic that if you take a $300 or $400 loan out in Mississippi, you end up paying back way more than double of the amount that you borrowed within a year. So I think some of the practices and platforms that you see in where it's a bit more open, you have a lot of people who want to lend out money, And in the beginning, you saw super high interest rates, 14, 15%, which is better than the 30% credit card rates that you see in the US and Europe. Now you see P2P rates, fall to 8, 9, 10%. So those are pretty good rates for consumer and credit card versus consumer payday loans, credit card debt, and other forms of lending that are the only thing available to consumers who don't own their own home and don't have the best of credit.
Okay, that's lending, but how can it translate into insurance? How does the P2P work in insurance?
Well, insurance is still, very, very early days, and it's an extremely regulated market. Um, but at the same time, I think that if you look at insurance, it's a great business to be in because all you have to do is show up as an insurance company and you print money. So of every dollar that a consumer gives to an insurance company, 40 cents gets paid back. So that's wonderful. It pays for a lot of very large and fancy offices the world over, and I think their shareholders are for now at least very happy. Now, what's changing with that? Well, doing insurance requires a license, but you have pools and other type of insurance-like products, which are generally legal the world over, that give very similar protection to the consumer without the fees. So we have a company in China called Tongzhu Bao. They instead of taking 60% of what the insured or the participants in the pool put in, they take 25%. So just on the very base of it is almost twice as better than traditional insurance.
Okay, well that sounds like maybe it's not moving in next week, but it sure sounds a wake-up call for both banks and insurance companies outside China. Thank you very much, William, for this comment.
Thanks a lot.